Hello there, Maverick Traders. This is Robb Reinhold. This is the Trading Room. We are on monthly option expiration week. Monthly options expire on Friday, so let's jump into this. In this video, we're going to be going over what happened this week, look at some of the news, take a look at the broader markets moving, and then we're going to look at it right here, right now. I always use the hypothetical of if you woke up out of a coma, you've been in a coma for 10 years, and you wake up and the first thing they do is show you a stock chart, and they show you the stock market. That's how you should analyze things all the time, a completely blank slate to where you're really just looking at the data and your biases are all gone. And then we're going to also look at some setups. I think I've got 5 or 6 trades for you this week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Last week was an up week, and if you remember, last week I said I think we have a couple more days down and then I think we're going to have a big rally. Well, the market rarely listens to my opinion, and it just rallied all week long. So we didn't get any deeper pullback. We went up to basically our highs, and my opinion, and we'll get into the charts here in a second, I thought that we were going to have to spend maybe another week or two basing before we could break out. When I looked around the world, and I looked at like the Nikkei and other major markets, they broke out this week. They all broke out this week. So for me, I'm looking at this saying, okay, well, I think maybe it's going to come sooner than later. Some big news this week. We got a Bitcoin spot ETF was approved by the SEC. Now, look, I know not everyone is a crypto fan. I'm not a crypto fan. Look, I like crypto just fine, but I wasn't. I had Maverick traders telling me in 2015, you got to get on board this thing. And I'm like, wait, what is it? They're like, they told me what it was, but all I heard was, it's fake money. And I thought, no, thank you. I don't want to take my real money and turn it into fake money. But all of a sudden, right around 2018, I started looking around to all my nieces and nephews who were getting into their 20s. And when they put money in investments, they were buying cryptocurrency. And in 2019, I really had to come to terms with, look, if I don't believe it's real money, but enough people do believe it's real money, and these millennials, they were buying it up quite a bit. And I knew that in 20 years, these millennials, they're going to be running the world. And I thought, oh, I better get on board, because if enough people think it's real money, it's real money. This is another thing. It's just been knocking down all of the reasons why people didn't like cryptocurrency to where it's now really a legitimate asset class for sure. And last, let's talk about bond yields. They fell back below 4%. The market loves that. Bond yields below 4% is very, very bullish for the market. Let's jump in and take a look at the economic news. And really, we just had two. We had the CPI came out on Thursday, a little bit hotter than expected. The market initially dropped and the bond market shot up. The bond market shot up, but then by the end of the day, it had actually fallen back lower than where it was. And then on Friday, we got the PPI that came out and said, hey, don't worry. Inflation really is cooling down. Everything in this report says the Fed is on hold and possibly might even cut. We'll see. Let's take a look at last week's trades that I shared with you. First one was AEP. Now, we had a butterfly on this one. And you can see this stock ran down to the bottom of its range. Our butterfly was near the top of this range, so we definitely need some movement back up with this one, but this one has one more week on AEP. Next, we had a bullish call on Meta. Meta was up 6.1% for the week. Our upper strike on the trade is 357.50. Unless there's a huge pullback this week, this is going to be a really nice max gain on Meta. Next, moving on to Teva Pharmaceuticals. As you can see, it just based. It just based last week. That's fine. That's totally fine. Give this thing a little bit of time to rest. We really still like this one to the upside as well. We were looking at Capital One. We really liked this high base, and it was breaking up to the top end of the range. We did a 130, 135 diagonal call spread, And you can see it did not do well last week. Not at all. Look, it's still in the base. And again, we're in a diagonal call spread, which it's okay, but this trade is definitely a negative one at the moment. And we're going to need a rally to see that, that value come back in again. And then last, Zoom. Zoom, if you were doing the January 19th, 65, 70, 75, it looks absolutely fantastic. I know we had a call for one a little bit lower, and it was a mild loser unless you got out on Friday morning. Then it was a really nice winner. But those are the trades. Again, decent. This is just how it works. We just are putting trades out there. Some work, some don't. And then a couple times during the year, we get these big runs and we get big gains, and then we go back to just singles and doubles and some strikeouts and some foul balls. That's literally how trading works. Let's jump into the market. I'm going to go through this fairly quickly because I want to get into the trades of this week. You can see the Dow was flat. The S&P and the Qs were up nicely. Basically, everything the Qs lost last week, it recovered this week. Same with the S&P. Russell was flat. Definitely underperforming here. Oil has been trading between 70 and 78, so last week was an up week, there's a down week, no big deal. And gold has been going nowhere for the last 6 weeks, and it continues to go nowhere. Let's take a look at this chart. This chart here on the S&P, you can see that we might have an ascending triangle going on, we might have a base going on. Look, all we know is these patterns are very bullish. I looked at these two candles and thought, okay, we don't have the juice. We don't have the gas to break through. It's coming up to that resistance line, and we're just not breaking through. I thought we might have to have one more little pullback or one little base before we broke out. But like I said, other markets around the world are breaking out nicely, and usually they all move together. So I do think it's likely we get a breakout this week. The Qs still have a little bit of ground to make up until they get back up to their level, but again, this is like less than 1%, so there should be no problem at all for the Qs to break out as well this week if the markets break. Here's the heat map for the week, and take a look at all of the usual suspects: Microsoft, Apple, Nvidia, Google, Amazon. These all really lifted the markets up, especially the tech and the communications sector. Outside of that, you can see it's about neutral here, but more green than red. More green than red overall for sure. Let's take a look into next week. I've got here market outlook, breakout or building a base to break out. I don't know if we break out this week. Like I said earlier, I was looking and saying, I think we need one more week. I'm not sure that's the case. But anyway, high bases tend to break upward. The 10-year bond. If the 10-year bond pops back up above 4%, maybe like the 4.1, I think we're in more of a base week. If we stay below 4, I think we do break out this week. And look, we've talked about the January effect. The January effect is pretty much over at this point. I'm not going to talk about it again until next year when we are in the exact same situation. Next week, not a whole lot of reports to really talk about. We got a retail sales report on Wednesday. No one's really cared about the retail sales. It's been coming in better than expected, and everyone just kind of shrugs their shoulders. And other than that, that is it. There is nothing on the calendar next week I think that's going to move. So here we are. We are in the third Friday, or the third week of January. It's monthly options that expire. We're in this very strong pattern. We moved to a +1 last week, and we just moved back up to a +3. We went from a +3 down to a +1, back to a +3. So look, this market is bullish. I'll say the same thing that I said back in November. Look, if you think this market is overvalued and it's going to crash, okay, that's great, but it's not now. It's not now, so you may as well ride it on the way up and make some money while you're waiting for this market to fall apart. Now look, I was a perma bear once. For a couple of years, I was a perma bear. My biggest fear was that I would finally buy into the rally, and that would be the top, and I would look like an idiot, and I'd feel like an idiot. And be like, I knew I was right. Look, I know that. That kept me out of a ton of rallies for about 2 years. Look, if it's going up, get long. When it turns over, go short. That's how you trade. You don't entrench yourself into one camp or the other. Let's take a look at the sectors.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Sector performance, technology was the standout. Now look, this simply made back what it lost the week before. Comm services, we had been more bullish on comm services. Comm services was a +2. It had a great week. You can see everything else mildly bullish. We liked healthcare the best. That was our #1 sector, and it did the best. Financial was our #2 sector, and it did not do so great. But take a look at materials and energy. These 2 sectors are definitely trailing the rest of the market, no question about it. Let's take a look first at the utility sector. Last week, the utility sector was a +1. This week, it's a 0. We are back down between the moving averages. One moving average is going up, one is going down. That is definitely a 0. Next up to communication services. Was a +2 last week, +3 this week. Again, it just looks great. It looks absolutely great. Could it be a little tired up at this level? Yeah, sure. I got no problem if someone says, Rob, this looks like a little tired here. I'm going to go to another sector. Great, but don't short this. This thing could still have some legs left. Real estate. Real estate, leaving it at a +1. It was +1 last week, +1 this week. Look, it's just hanging out. It's doing a base pattern, but until it breaks out and moves higher, we'll just be mildly bullish on it. Healthcare was our favorite sector, +3, and you can see a nice run. After a very strong run, we get nice candles. Look, we have all green candles. They weren't all up days, but they were all green candles, meaning by the end of the day, there was more buyers than sellers. It's a great sign when you have a strong stock or strong sector and you get this basing, but with all green candles. Really powerful. Industrials, +1 last week, +1 this week. This bounce here in industrials is definitely not encouraging to anyone really looking for industrials to have a strong move. We're at a +1. We think it's going to go up, but probably not be the best thing in the world. Next up is the financials. Financials last week were at +3. Now we're at a +2. We backed all the way down to that 20-period moving average. Look, it's still a base. This still looks good. It just, when we're looking at momentum, this doesn't have the momentum right now. It just doesn't have it. We're going to downgrade this to a +2. It's still moderately bullish. Take a look at the bounce and the failure in the consumer. We had a bounce up. We came. This pattern looks really different than all of the other sectors we've looked at. Remember, all of our sectors were like high basing up here, and maybe they had a pullback or two. Not this one. Big pullback and an utter failure on Thursday and Friday in a pretty decent market tape. So for me, it's at a 0. If you want to look at bearish, I think consumer is a good place to look for some bearish plays. Definitely underperforming everything else. Tech went from +3 to +1, back up to, I got it at a +2. Now people can say, Rob, I think that's a +3. Look, this 20-day moving average is still sloping up a little bit. We're pretty close to the 20. I just gave it a +2. Just gave it a +2 to say, look, I'm bullish on it. I like it. It's just not my top sector. Here we have the material sector, and look at this utter lack of bounce. I mean, at least consumer had 2 or 3 days of a bounce, not this one. It just sunk. It just sunk and continued to go lower. So we are downgrading materials to a 0. And then energy, boy, energy has been all over the place. -2 to 0 to +1 to 0 to +1 to -2. It is a roller coaster, but here's the thing. There's no question. If you remember last week, I said I'm starting to get mildly bullish on the energy sector. We had a 2050 cross. We have a little bit of price action moving higher on it. And I thought, oh boy, that's a good sign this is about ready to turn over. Nope, absolutely not. And if you remember in the Trading Collective video, we tried to find an energy play to go long in. There wasn't any. So we finally said, hey, there's nothing to go long. We can't go long. And you can see it was a signal that there are not any good trades in that sector. So here's where we were last week. So what happened last week? We upgraded technology and comm services. Those are the two biggest ones, but look, they also were the two ones that fell the most the week before. We have financials weakening a bit, just financials weakening a bit, and then downgrades in materials, utilities, and energy. So this is where we are. Now, I love this kind of display here because I hate it when they're all +3. And that's where we were a couple of weeks ago. They were all +3. And it's like, well, which one should I do? And again, we were giving them like 3 pluses and 3 minuses. This is much better. Now we can see that this is where the strength of the market is. And again, financials fell down a little bit. Comm services and tech moved up. I'm going to keep that into consideration when I'm looking at trades. And speak of the devil, let's go look at some trades. First up is comm services. Now, we did a comm services trade last week in Meta, and it was great. The question is there more juice? Is there more bullishness in comm services? I think there is, but I think you got to look at the right places. If we take a look at what was strong in comm services a month or two ago, it was all the hardware companies. It was all the hardware companies that were really having the big runs, and they've kind of faded. And then all the software stuff like Meta and other things are starting to jump up. Cell phones have done quite well in this sector, and I love that they have not backed down. So here's T-Mobile. And you can see this is just a really nice base, and this is what I call a high and tight base. I love high and tight bases. They're my favorite patterns. Before, they used to terrify me, but now I get excited about them. The big question is, okay, how do you want to play this? 165 is right here. A really easy way to play this would be with a diagonal call spread, where you would go long like the 160, sell the 165. That would be a really just nice slow-moving trade. The 160, 165 diagonal call spread. If you want to get a little bit more aggressive, then I think you want to just go with the straight bull call spread, 165 to 170. So this thing's got to run, so give it some time. I'm looking to go out to all the way to February 2nd to give this thing 3 full weeks to march up about $7, which is about 4.5%. That's a decent target on this one on T-Mobile. Next up is industrials. We haven't done an industrial trade for a little bit, so I wanted to look at one. Here's CSX. Just a beautiful, beautiful high base. And this one is doing what T-Mobile was. Now, look, when we looked at T-Mobile, it was about this far. We can see we got another week of sideways. But take a look at just in the past couple days, started to get this upward slope, and look what's pushing it. A lot of times it's the 20-period moving average that pushes it out of resistance. I think this thing is ready to pop. Now let's talk about pop, because this is a slug. This is 32. This is 33. This is 33 to 34. That's $2. So look how long it took to just go up that much, $2. You can't look at this and be like, oh, it's going to run to 40. No, it's not going to run to 40. I think a target up to like 36. 36 is about as optimistic as you can get on this. It is a nice high base. It could go higher, but I think the highest you could go is 37. I think 37 is about the most optimistic that you're going to be able to go on this. So if that's the case, then I think you want to do something like a targeted butterfly right on that 36, or you can do the diagonal call spread, which again will also be right on that $36 strike. Moving on to consumer. I said earlier that if you were going to look for a short, This is a sector I like, so surprise. Here we've got a short. All right, this is Li Auto. This is a Chinese automotive maker. Chinese stocks are really under pressure right now. They're really under pressure. And just take a look at this. This is what's called an ADR. It means it trades in another country. And they have a stock here that just simply follows what it does. What you're going to see when you see ADRs is gaps all over the place. Why? Well, look, it's going to open up here in the US where it stopped trading in China. So it's pretty much going to move every day in China, and then it's going to be readjusted here. There's lots of gaps on this, and if you have a strategy that has sensitivity to gaps, you cannot play these ADRs. They're just a little bit too gappy. We are heading into a little bit of support here, but you can see we are right there. If it breaks through it, I like this thing all the way down to $30. $30 would be that target. I think the play to look at would be this 30-32, the 30-32 bear call spread. And it's just going to be from right down here to about here. This is directional. You're going to need this to follow a little bit more. If you want to be less directional, do a 31-33. There's nothing wrong with being less directional here, but this one's got a lot of momentum to the downside. I think it looks like a decent short. And speaking of decent shorts, probably the most decent sector out there for a short right now is energy. We can't get too over our skis because energy has come down a lot, and it's come down a lot because oil has come down a lot. Oil's come from 90 all the way down to the low 70s. Unless oil is going to break lower, probably the most of the moves are over in energy. But if oil stays down around 70, I have a hard time seeing the energy sector having any bounces whatsoever. I went out and found the weakest, the absolute weakest of the stocks, and this was it, CVE, Cenovus Energy. And I thought, okay, I want to be bearish, but I don't want to be overly bearish. What's my call? Well, a 1 week, 15-16 bear call spread. This is what you're looking to play, right here to right here. This is a pretty wimpy trade. It's right in the middle. So you'll probably have an upside max gain of 55 cents, max risk of 45 cents, 1 week trade. If energy bounces, hey, you're going to take your loss and move on. If energy continues to stay weak, this is the weakest one out there. And you can see the way it closed on Friday at support. When it came down here, it closed with a hammer pattern. This one is a nasty, nasty pattern after 4 days of building some momentum. I like this one, 15-16 on the bear call spread. Or again, you can use the bear put spread, doesn't matter. That's all the trades I have for you. If you have trades you want to share with the rest of the group, you know where to go. Log into the Maverick Trading website, jump into the forum, and let's get that discussion going to help everybody be profitable. In conclusion, markets poised to break higher. I don't know if it happens this week. Look, I don't know if it happens at all. But of all the times I've seen markets do this, most of the time they break out. It's right there. Is it this week? Is it next week? I don't know, but I know I want to be there and be ready for it. Very bullish on the markets at this moment. This week, what we do every single January is we do a 2024 year in review. We talk about the markets, we talk about Maverick, we talk about trades we made, we talk about the year, and then we figuratively, tie a bow on it and never talk about it again. That's the great thing about the market. It does not care what you did last year. It doesn't. If you had a good year, great. Don't get too cocky because the market doesn't care. If you did bad, guess what? The market doesn't remember. All it cares about is what you're going to do now. So we'd love to basically do a little celebration. Great job. We'll talk about some of the good, some of the bad, and then let's just put it to bed. And now we're on to 2024. So we do this every single year. It is a live session. So go to the website, log in, go to the calendar, register for the session, and we're going to have all of our team of traders on that panel, and we'll all kind of talk about the year. Thank you very much, everyone. Have a great weekend, and happy trading, everyone.